Hello, Tiernorts, and welcome to this daily market commentary for Wednesday, the 31st of July, 2019, the last day of a eventful month and a date on the calendar, which for most FX and equity traders has been pretty prominent. So the big day is upon us. The Federal Market Open Committee meeting, or FOMC for short, is upon us. And before I start going into that, just briefly touch on crypto, which is still very much largely unaffected by data releases and money market actions, etc. Crypto being very quiet over the last couple of days, following on from the rather sharp, quick sell-off over the weekend. BTC starts the day up around the 9750, 9800 area, up a little bit from late Tuesday, and Ethereum's up to 213. Across the board, we had similar small 2 to 3% moves higher, but not too much in the way of volume. And then we get a brief rally, or a quick rally, I guess I should say, which extended Bitcoin past the 10,000 area and ETH up to 218, really on the back of an article suggesting that any Bitcoin ban in the US was highly unlikely. Now, I'm not particularly sure there was any real concern that it ever would be banned, but the market, just desperate to latch onto something, and this was a positive, so took it a little bit higher, but that was pretty much where the day ended. Bitcoin just marginally above 10,000 and ETH around the 217 area. So moving on to FX and equities, fairly quiet start to the day, as you would probably expect ahead of the US rate announcement. First up, we had some data. We had the US ADP employment data, which is always a precursor to the non-farm payroll data on the first Friday of the month. On this occasion, the data actually came in very much as expected, showing a gain of 156,000 jobs. Didn't really move the market at all. Obviously, bigger and better things to focus on. Had Canadian GDP out just shortly thereafter, and we did get a reaction. It came out a little better than expected. And we saw dollar CAD move from 131.55 down to a low of 131.10. But that was pretty much it for that move. And then fairly quiet for the rest of the day, or the New York morning anyway. And then when Europe went home, we had a little bit of a good old-fashioned squeeze as market participants reduced their exposure and risk a little bit ahead of the FOMC rate announcement. We had sterling racing higher, 121.65 up to 122.30. Obviously, that's been under a lot of pressure recently, probably some stale short positions. We had dollar CAD reverse also back up to 131.55, pretty much undoing the entire move we had from the earlier GDP data. And we had euro had a little lower as well, back down to 111.30. So rate announcement, 2 p.m. New York time, and the Fed cuts interest rates by 25 basis points. Not as much as some were looking for, and the initial reaction really is for the dollar to rally. Euro crashes down to a new low around 110.90, briefly breaking support at 111 the figure. Aussie, I guess US also comes lower, down to 68.61, dollar CAD up to 131.85. But these moves are short-lived, all of them reversing by 30 or 40 points in fairly quick time, as the market sort of tries to find direction and absorb the statement from the rate announcement, and also await the press conference from Chairman Powell. Equities initially headed marginally lower, and we had gold drop down to 14.25 from around 14.32. The US 10-year yield drops immediately from around 206 down to 201. The main undertone to Chairman Powell's remarks was this rate cut as a supportive rate cut. It's there to help the economy expand and assist in pushing inflation up to the 2%, level, which is kind of the Fed's target. So it's more of an adjustment than a trend. And the market certainly interpreted that, meaning this is a one-off, a one-and-done deal. And with that, the dollar rallied pretty quickly. Euro dollar now finds a new low, 110.60. We've got Aussie down to a low of 0.6832, right on support that I've highlighted before. We've got the Dow Jones down a whopping 460 points at one point in time. Sterling's back down to 121.50, and dollar yen rallies back up to 108.80. So this all ends up being rather dollar positive and an equity negative. It's a mess. The last thing the market really wanted was a one and done situation, and that's certainly the initial communication from Chairman Powell. Although it must be said, he was actually asked outright, is it a case that this is just one and done? And which he refused to confirm, and did go back to stressing and highlighting that the Fed would be data dependent going forward. It should also be noted as well that the Fed, I think, was due to end their balance sheet reduction in September, and they actually have ended that here and now in July. So we close the end of the day with the dollar really just off its highs, but the momentum is firmly in its favour. We've broken some key levels, especially in euro today, and it's fair to say that President Trump is not happy because obviously he wanted the Fed to cut rates by more, and as we know from the last couple of days, just before the weekend, he was looking, he was talking about intervening in the dollar to weaken it. And obviously, we've got a case here where the Fed have cut rates and actually strengthened the dollar. So he was not happy, and he made that fairly well known in his traditional manner of a tweet. So just quickly moving on to a little bit of a technical picture. I picked euro dollar really just because we did break a very significant level at just above 111. As you can see here from the daily chart we have in front of us. We've got this line here. It's been touched a few times. We had a couple of attempts at breaking that sort of 111, the figure 111.10 level last week, and failed even on ECB day. But today, we broke, and now we're lower. So I just really wanted to highlight that. If you look below, there's not a whole lot in the way of support, and this is going back to May of 2017. You got initial support, call that 108.40, and then another support level coming in at 105.68, I guess, probably from somewhere around there. We know from the ECB press conference, they communicated fairly clearly that they have a desire to add to what is already a very sort of easy monetary condition environment. And now the Fed appears to be done at one. The downside for euro dollar becomes particularly vulnerable, and given we've just broken such an important support level, I will keep a close eye on it. And obviously the story for the dollar across the board is probably very similar. The rate cut we've seen today has actually supported the dollar, which would be a little bit contrary to what you would normally imagine, but it's all about perception. And with that, I shall bring it to an end. I hope everyone had a really good month trading, and I wish you all the very best of luck for August. And I will talk to you tomorrow. Cheers.